My name is Mark Johnson. I'm the chairman of the Prime Investment Committee. I've been with the business for a little over 20 years now. This morning, we'll be talking to Panos, who's the managing director of Lucent Property Development. Panos has delivered in excess of $400 million worth of property projects in his previous role, which was a construction manager, and brings with him his ability to influence design for buildability, in turn delivering projects on time and to budget. The connection with Panos and Prime goes back to 2017, when we and our clients helped finance the Nightingale, Brunswick East and Little Miller projects. In total, it was 66 apartments, 5 commercial tenancies, rooftop terraces and gardens. Since then, we've also helped fund the Stewart Street Collective, which was 69 apartments located 7 kilometres north of the Melbourne CBD in Brunswick. And then we also more recently have been involved in a project in Cholmondeley Street in Prahran, which is 9 townhouses. And they're about to be completed. So, I mean, our clients have not only been involved in profitable transactions, but importantly, delivered affordable housing while staying true to some of the environmentally friendly design features that Panos and the team of Lucent have provided over the years. So with that introduction, I'd like to hand over to Panos to talk about the latest project, Bastings Street in Northcote, 47 townhouses, and it's had development approval, so things looking positive, and we're moving to the next stage. Panos, over to you.
Thanks, Mark. Again, my name is Panos Multiadu, so Managing Director of Lucent, business that was formed over 8 years ago, specifically residential property and some commercial property assets. Our journey involves purchasing a site and delivering it all the way through to turnkey, so settling owners in most cases. So I've got a slide here, Mark, that I'll put up just so that everyone can see a little bit about our business, and then obviously I can talk to the project. So just bear with me while I get that up. Okay, so Lucent's the development group, and this project specifically that I'm going to be showing you is 84 to 96 Bastings Street in Northcote. The site's 6,100 square metres, and we've basically gone through a process now to get 47 townhomes approved for the site. So Lucent, what we do, it's about being direct, specifically with our investors and obviously our purchasers. So a very transparent relationship is something that we're after, something that's quite important to us. We want to make our process better. And when I say that, we only do buildings that are fossil fuel free, carbon neutral in operation, and high energy efficiencies. And the idea there is that it's quite sustainable in terms of running costs for the end user. We want to see what others can't, so find locations that others can't. This specific location in Bastings Street, by way of example, was an old abattoir that had been demolished. The site had been cleaned and remediated and was sitting vacant essentially. So we made a private approach to the owner and saw this great opportunity to be connected to an activity centre. Obviously looking for knowledge. So, you know, our whole business is built on knowledge, what a marketplace looks like, what people are after, and what product type works considering demographic analysis. Leave it better when we found it. So in our instance here, you know, we're taking an old abattoir and we're going to turn it into a beautiful residential zone. No different to what we did with our first project, which was that Prime were involved in, which was Nicholson Street. We took an old service station, remediated the soil, and then obviously produced 66 homes. And then having fun. It's all about having fun and enjoying this process that we go through. Who are we? So, you know, my name is Panos. I've got a construction background, engineer by trade, worked for many, many years with a private property development group, and left that group specifically because of the quality of product that we were producing. Very very investor driven, low quality, and not a lot of legacy behind it. And Lucent was designed to be a project, business with legacy. And I wanted to specifically design products that a homeowner could relate to. The team includes Peter Small and Tony Petresky. So we manage our projects in-house. The rationale behind that is that we're in control of it. We can fix our issues. We can also learn from our issues. And then to the same degree, we can connect directly with our purchasers and our investors rather than a third party. So the team's got collective experience here, 75 years in total, construction and both acquisitions and development analysis. Previous projects, we're from 17 apartments in our initial journey in Kew through to 42 apartments in Carnegie and William, Little Miller and Nightingale Brunswick each, which Prime participated in back in 2017. A little bit of investor returns there, just so that you can get your head around it. So we broke up the investments. If I look at Nightingale specifically, in 3 different tranches. Tranche 1 being 19% IRR, all the way through to Tranche 3 being 12% IRR. That was de-risked with, fully sold out developments. I might add that all the developments that we've done with Prime to date have sold before any senior bank funding has come into place for construction, and it's a record we're quite proud of. Investors have been involved with us for over 4 cycles in terms of this journey. Prime's on its 3rd cycle, 45 mil of investor funds over the course of the 8 years, $155 million of senior funding through the course of that. The last project to be completed with Prime was the Stewart Collective. Again, a COVID project, so quite a difficult project in the context of the environments that we all faced through that period of time, but still great returns for investors considering the delays in the industry, the lockdowns that we had. And again, 69 homes were delivered and no settlement risk in that context. So we worked quite closely with our homeowners. Slade House is a project in Brighton that we've recently completed, and then Chomley Street is the one that a lot of Prime's investors involved in, 9 townhomes and all sold and completing in the next 2 and a bit months. Again, important to note from our perspective that the construction knowledge is something that we keep quite close. We work closely with builders. We form great relationships with those builders, and that's quite critical in terms of ongoing delivery and costing understanding, and also understanding the ebbs and flows of an industry at the minute that's under pressure in a lot of ways, and doing a lot of work to make sure that the balance sheets and the strength financially of those builders is where it needs to be, so that we can obviously deliver these projects over anywhere between 12 and 24 months, depending on the size of project. We've won awards. We're proud of them. So best new developer of the year with REA. Our Nicholson Street project won best residential project in 2021. That's Australia wide, so not Property Council of Victoria, that's Australia, for the 66 homes we did there. Best consulting team in 2022, again for the Stewart Collective, and that was the team we brought together to deliver quite an environmentally sensitive project. And then our Slade House project won best build in 2022 for an under $10 million project. And as we sit on Slade House, we've been shortlisted for the Architectural Awards for 2023, which we're quite proud of. And that's me receiving an award. Bastings Street, so permitted, so like I said, 47 townhomes, permitted in 2022, built up over 3 tranches. The specific project carries a revenue of $79.5 million. Our price points in terms of individual stock range from 1.3 to $2.2 million. The medium house price for a townhome at the moment in Northcote, even in the current marketplace, is 1.6 to $1.7 million, and that's a traditional 2 to 3 bedroom with 1 car. We're offering 2 cars in individual car parking through all of these 3-level townhomes with 3-bedroom minimums, and then living, dining, and all with north-facing aspects. So the idea is a high-end offering with great return for the lower cost product for an investor if they wanted to buy and then obviously rent, and then to the same degree, beautiful homes for people to live. So owner occupier in design is the focus. We've purchased the site now. It's a $22 million acquisition. We've got a number of builders that we're working through, which I'll go through later. And then obviously our feasibility after costs is showing a profit of about just under $13 million, so 21.38%. Bank funding, which is a bank coming in to help us obviously fund the construction, traditionally work on a profit factor of about 17%. So we're well and truly above that in terms of the feasibility and its health. Where are we? So Melbourne CBD, the site sits on the southern end, let's call it, of the Northcote precinct or the Northcote suburb. So our site via roads is about 7 kilometres away from the CBD, 5K as the crow flies. The specific activity centre is High Street, which I've highlighted here. Coffee shops, restaurants, pub culture, a lot of apartments, and then we sit slightly off that in Bastings Street. The reason we bought the site specifically is that there's very few townhouse sites at the minute in Northcote, a lot of apartment stock, and we saw that gap in that marketplace specifically for such a large infill site. So our logic was that the marketplace is looking for an alternative offering, specifically with those right sizes in terms of purchases. And so we saw that as a vacant spot in the marketplace for us to play. The site sits basically near the Ruckus Hill precinct within Northcote. We've got beautiful city views from the southern aspect. So the top image where Johnson Park is roughly where our site is. Our southernmost townhomes all have city views. The site shown in the lower image here sits to its south, sits West Garth Primary School. To its east sits Johnson Park. The site faces Bastings Street, really wide coverage, and we're not bringing any cars onto site. The cars go into basement, so the whole site in terms of ground level is walkable. The idea is that it interacts with the current state of the streetscape and becomes a walking path, not only for people that live within the dwelling, but obviously for people in the street. So just enabling community. Just showing some of the images here. This is the image on our right is a view of our communal garden space. The idea is that people can interact with the gardens. There's productive gardens for people to grow and interact, and also places of solitude in terms of you can go and sit, read a book, have a barbecue with friends and family. The site has got over 20% of walkable space, so you can meander through 4 different landscapes. Or walkways, I should say, find your way through, and then also allows community to interact within what is a large site, but then obviously a community-focused site. The image below shows, a balcony. So all of our master bedrooms have got a beautiful balcony in their own right, so that in that solitude of your own space, you've got your bathroom, your walk-in robes, your master, and then obviously the ability to enjoy a balcony terrace. This site, no different to the way our business and its principles work. 7.5-star rating. So all that basically means it's quite an energy efficient home. So heating and cooling requirements are quite low, which means that you're not burning electricity. So your running cost of a home is low. We've got solar panels to all of our homes with optional upgrades for purchases, specifically solar storage. So the panels come standard. You take the benefit of that through peak. Let's call that through the course of the day. And then you can also opt for storage. So if someone did opt for storage, a home could stay completely off the grid. And that's a purchaser's choice if they would like to do that. It's a $10,000 premium for purchasers, but keeps your home completely off the grid if that's something that you're interested in. And the demographic here is very eco-friendly, also very sustainably focused. So it appeals to that marketplace. Electric car charging capable within the whole development, and then obviously communal gardens is quite a big requirement in terms of enabling community. That's just an image of the Bastings Street frontage. So again, a wide site, over 6,000 square metres. In this instance here, we've got a 2-level format, but larger townhomes with 3 beds. just showing what it'll look like from Bastings streets and how to enable. We had quite a journey to get a planning permit here, but we had a community that in the end rallied for this, and we didn't end up in VCAT, which is where you'd go to fight for a permit. We actually got an outcome with neighbours, and that's a great result because they see it blending into their own community. So it was a good journey from our end, and shows that the development's well received. From an investment perspective, just to explain, so what we're looking to raise here is $2.5 million, specifically for the stage we're in, which is obviously we're in marketing. We're taking this to marketplace and obviously looking for buyers. In that, it helps us build a display suites, which is currently underway anyway. So we're probably about a month off completing our display suite, which will showcase the project with kitchen, bathroom, bedroom. From that, we move into construction towards the end of this year. This investment helps us get to the start of construction as well. We're looking at this in two stages, so that you as an investor can understand through the sales and marketing component, which is us de-risking the project and achieving our sales target, which in this instance is we need to sell roughly about 22 to 28 townhomes to get a bank involved to fund construction. That period of time from launch is about 4 months. Marketing collateral and sales packages are all already produced. That runs for about 4 months, and then we go into the construction stage. The construction stage is about 24 months. Involves obviously building the basement and then obviously building the 3 levels above that. That'll run for about 24 months. And the IRRs that we're offering there in terms of rates of return per annum are 16% through the marketing and sales phase and 13% through the construction phase. Looking at about a 28-month period of investment. So in that context, you know, for a $2.5 million investment, it's about a $783,000 return as a total to investors. So for a unit at $50,000, your return on your $50,000 would be $15,666 based on those terms. And again, 28-month period. If for whatever reason the period extends, let's just say, then obviously the IRR continues. So it's not capped, it continues. So for whatever reason, let's just say that sales and marketing took us 6 months, and the 16% would apply for an additional 2 months. If construction went for an additional 2 months, the same scenario, the IRR would continue to apply. And then just to give investors some confidence as well, if we did really well and the whole period shortened, their return is, or their return is backed by a percentage, which is to a unit certificate. And so the return being that, you know, we've finished earlier, profits obviously do go up when you finish earlier in the context of cost and time and interest to banks. That profit pool increases, and then investors take a percentage of profit. So they get either the IRR rate or the percentage of profit, whichever is the higher. Through this, it's also good to know that the hierarchy of returns is important. So investors get their return first, both firstly in capital, so the initially invested funds, the returns, and then from that it cascades down to the sponsor. So we're always last out in terms of as a business and as a director. And that basically means is that there's an overrun cost, as an example. Let's just say that there was a $2 million overrun cost, an example. What's getting diluted is the sponsor. So our return gets diluted in order to protect the IRR and also to protect the percentage return to investors. So in that context, there's a $6 million contingency pool in that context. Just where are we now? So we've obviously purchased the site in 2021. We've worked through the planning stage, which is November 22, had that approved. We're currently right now building our display suite and launching to market, which is happening as we speak. We're looking to get our senior funding in place in October. Commonwealth Bank have funded the last 4 projects for us. Great relationship with them. They understand the project. They've been heavily involved in terms of understanding its feasibilities, and then obviously they'll play a role once we hit our debt coverage in October. And then obviously through from October to completion, which will be September 25, and then returns back to investors. That's just another image showing one of the townhomes in row C. So different articulation in design here, just by way of an image to to show that there's a diverse range of products that we're offering. And that's us in terms of the project.
Panos, it's a quick question if I could, just in terms of the potential buyer for one of these homes, and you mentioned that it could be an investor or owner occupied. It's fair to say our experience has been that most of the housing that you've built has tended to be owner occupier. Just want to have a comment on that.
Yeah, listen, it has been, Mark, and it's by design. If I look at the industry and go back to 2014. In 2014, Victoria delivered 25,000 apartments, and that's when we had no embargo on foreign investment. There was a lot of purchasing of apartments being held by overseas individuals and funds who were getting rental yields on it, and that marketplace basically came to a grinding halt with a lot of the rules that were changed in terms of Foreign Investment Review Board and different taxation levels. So the market in terms of investor completely changed, and numbers came down dramatically to about 17,000 the year thereafter. We looked at that when we formed the business, which was back in the end of 2014, and said, well, we don't want to play in the investor market. We'd prefer to look at owner-occupier product, design homes that people want to obviously live in, and then market that to local communities. We found that, generally speaking, our buyer sits in a 4-kilometre radius from our site, and those are people that are moving slightly out for bigger, or people moving slightly in for smaller, in most cases, in terms of dwelling size. And that market responded really well to our offering, and also our process, Mark. The big thing for us is that when you buy from us, you don't just get keys in 2 years' time. You walk the site with us every 3 months as a purchaser. You see your home get built, and what we're after is that raving fan. And what we've had from that process is quite a successful, following, and that following obviously follows us to project or refers it. So that owner-occupier stock means that we're always producing a higher end product in the context of finish and things that are really livable, rather than a hotel suite, which is, what the marketplace was, just boxes and, built for renters. And there is a rental market out here. There's a really strong rental market at the minute. But we've always seen that right size is where our marketplace is. And Northgate, in that 34 to 45 age bracket, 60% of people rent. So it's a perfect marketplace for people that have now brought together a deposit over time to move into a dwelling, to a home. So that's our logic.
Yeah. And look, from an investor's point of view, in terms of settlement risk, you'd rather have an owner-occupier who's been on the journey, as you say, with their home. They're involved, they're emotionally committed to the project, and settlement issues should be a lot less. Certainly, it's been our experience that you've had no real settlement issues, and from my point of view, I tend to put that down to the high rate or high number of owner occupiers, purchasing in these projects. Just on that theme of an investment, and you're looking to raise money at the moment, and it's quite appealing that you've been through that process with council and community, and you've got that buy-in and support, which is great, and you've got that development and approval. So to some extent, some of the bigger risks have been dealt with through that process, because you now know that you're building 47 townhomes. But for investors coming into this project now and looking to get a reasonable rate of return, the real issue, and you did mention that you're in the marketing phase, so this really comes down to pre-sales, because you need to get a certain level of pre-sales before you can go to a major 4 bank and get your construction financing. So can you just give me a bit of colour and what that level of pre-sales looks like, and your process to get to that level?
Absolutely. So the big thing, so for a bank, generally speaking, to fund construction, just so the wider audience can understand it, they'll look to say, if you're going to borrow, and in our instance, it's about $43 million to build this development. If you're going to borrow $43 million, what we'd like to see is that you have at least $43 million of sales. So by way of percentage, $43 million on our $79.5 million revenue expectation is about 53% in dollar terms. which equates to 22 to 28 townhomes, depending on the individual value of those townhomes that we sell. That's important because it de-risks it from the bank. We take 10% deposits that sit in trust from purchasers, and they become unconditional in the context of the contract. So it's important to us to de-risk the site in the context of the debt coverage for the bank, which then enables them to go forward. The process of establishing leads and obviously interest in the project is one that we've taken over a journey. So our sites had signage on it explaining to the local community that we're planning something special, and we have been for a while. We've been talking to local community, and a lot of them were objectors as well, admittedly, about what we're trying to do. And then obviously get people on board, which is where we've got to now. And then with that same signage on site, explain that we're launching. That's resulted in over 120 inquiries. We're not online. We're not in any form of social. We haven't started our marketing journey outside of a sign that sits in front of the site. And of those 120 odd inquiries that we've had, we've got 16 specific purchasers that are waiting to see the display suite and have registered their interest beyond that of just glancing view. So our aim is to sell the 22 to 28 townhomes between now and the end of this year, so that we can obviously start construction. And that journey for us is one that we're used to. We've used the same sales agent. We've used the same marketing teams. It's one that we know quite well. We've gone out to all of our normal, let's call it team that help us put these things together. And our confidence level is quite high. Buyer feedback is specific around settlement. When are you settling? And that's in line with the current market and marketplace thinking with interest rates. But when you tell a purchaser they're putting a deposit down now and they're actually settling, let's call it in 24 months, there's a lot of confidence in what the market will look like at that stage. And we've also seen that with banks. Banks are prepared to lower the level of debt coverage. So instead of having to sell the $43 million, they're looking at things like, well, if you sell $34 million, we're still happy to fund you. And the only reason a bank would do that in traditional terms is that they have confidence on the exit, which is in 2025 when we're settling, that the marketplace is undersupplied, and their confidence level is that buyers will be there. So we've had really good feedback in terms of debt coverage and what the banks are looking for.
Yeah, I think also, over the journey that you probably, particularly in that inner north, I know you've done projects in other parts of Melbourne, but that inner north, I think you've really hit the market in terms of what they're looking for, particularly with the environmental angle. So, I'm having been through the journey now a couple of times. I think you've probably got a profile that people are aware of, and that helps with the whole sales process. Again, coming at this from the investor's point of view, and it seems like every second day at the moment, reading through the press, that there's issues around builders. And so a big part of this is getting it built within a time frame so that settlement can happen on time. What's your view? How did we get confidence that, because you're the developer, we've got to employ a builder. How do we get confidence that and then the issues with supply chain, which were particularly, I know that going through the Stewart Street Collective through COVID, that supply chain issues were pronounced. Can you help us just get a head around how that works?
Yeah, absolutely. And just going backwards to go forward. So supply chain, absolutely massive issue in terms of the industry through COVID and even out of COVID because of that pent up demand for product. We've seen the supply side of things improve dramatically. So getting windows, window frames, getting timber, specifically structural timber, structural steel, that's radically improved in terms of availability. I'm not having any issues on the current sites that we're under construction with supply. There's still shortages in labour. There's no question that's still an issue for a lot of contractors. The interesting thing with those conversations with those subcontractors, so one level below a builder, just so we're clear, is that their pipelines are basically, turning into dust over the next 6 months. So the eagerness now to look at projects beyond their 6-month, let's call it, runway in front of them is becoming more and more critical. So we see that opportunity in the context of labour availability and obviously lesser work for these trades improving dramatically over the next 6 months. And then if I take it up a level to builder, we're seeing builders, pretty eager to look at our project. The problem we're facing is that the level of due diligence that we now have to do over a builder is another page. Back in the day, outside of an asset and liability check on a builder and their capability to service, ongoing costs, that was essentially the due diligence and their track record. We've seen the likes of ProBuild fall with an amazing track record. So for us, now it's looking at their work in progress, the level of work that they've actually got on currently, what they've committed to in the future, what their balance sheet looks like in the context of being able to fund the project, because there is an element of self-funding for builders. They have to pay deposits, and then only then can they claim those costs from us. So we've probably looked at 10 builders and eliminated, 5 to 6 almost automatically based on the strength of their balance sheet, not their capabilities. So their capabilities are great, but just the strength of their balance sheets. For us, it's a builder that's got a good balance sheet and also not overcommitted in the context of further work to be able to deliver this. And as a build, this is a $28 million build is where we're looking at the minute, including GST. We've got at least 4 builders in that range, which is great. And for us now, it's about working through who the right team members are. And one of the questions, the investors might ask is, would you look at builders you've used in the past? So absolutely. We dealt with Markscon, who delivered the Stewart Collective project. They delivered that through COVID. There's a lot of on-site holding costs that they had to incur through those lockdowns and shutdowns, and their balance sheet carried them through that. Obviously hurt them in terms of profit return, as it did everybody, I suppose, through that time, but they've surfaced out of that really in a healthy manner. They're delivering another project for Nightingale as we speak, almost a $42 million project, which is probably about halfway through construction now. And they're a builder that's, that we'd love to continue to build with. The only reason we broaden it out is, again, strength of builder, capabilities, and then we're starting to have finite conversations, how long to build, what duration, and things like that.
Yeah. Look, it's in the interest of time, might, start to draw this to a close. But I mean, one of the things in closing has just been huge demand. We've talked about COVID and what that meant for the supply chain. But then if you look at what that did for population growth and how that's manifesting now, and I think over the next couple of years, we're looking at over 650,000 people coming into the country. This supply chain things seem to be getting better. The outlook, notwithstanding that we've had a bit of a pullback in property prices, and maybe they say we should have because they were pretty excited. It looks like it's a reasonable time to be getting exposure to this, and I think playing into this theme of renters competing quite a lot to find somewhere. We are in a market in Northcote where affordability is more available. So looking forward to the Bastings Street project and seeing how it all plays out.
Yeah, no, we're excited. We think it'll be a good good product and well received. And I think one of the things I was talking about just recently to someone was that the forward line demand. We're looking at 5,000 dwellings being produced over the next 6 years per annum, which is 3 times lower than we've seen in the previous 3 years. It's a good market to be landing in the context of having product to sell and even future pipelines. So I think developers are got to get behind product because next year and the years thereafter are going to be quite good, and that's just based on current supply.
Yeah. Panos, thank you for the time. Good luck with the project.
Thank you so much, Mark. Thanks for having me. Appreciate it.
Cheers.